I just want to thank everybody for joining us here today. As Renee mentioned, my name is William Gallagher. I'm coming to you today from the Market Traders Institute here in Orlando, Florida. I'm going to pull back my charts up here in just 1 second. This is one of the trades I'm looking at right now. I'm going to come back in here and show you why I'm looking at taking this trade possibly within the next hour as this webinar is progressing here. I'm also going to show you here on 6 other trades that transpired over the last day. I'm going to teach you a trading strategy on how all 6 of these trades on these different currency pairs were winning trades. So I'll come back in here in just a moment to discuss that, but I'm here today to show you my quick start Forex trading program. I think you saw one of my colleagues earlier here today, Joe Cavallaro. He taught you about our FX fast track profit acceleration program. I'm actually going to teach you a very simple trading strategy here today. I'm going to show you our charting software, teach you a trading strategy, show you how you can get all of this in your hands here today, make it very affordable. I call it my quick start Forex trading program. Teach you a trading strategy, teach you a little bit about analysis, put all these tools in your hands here today so you can literally start trading in this market immediately. Now, but before we begin, I do have to pull up this little disclaimer here because I am going to be going into the live market. I am going to show you that trade opportunity that I'm looking at. I'm going to teach you a trading strategy here today, but ultimately, when it comes time for you to actually trade live and you decide to make a trade on your own, that is on you. We're here, I'm going to teach you a little bit about a trading strategy, but it is highly recommended that you go through this entire education, you learn this trading strategy, and you become a knowledgeable trader before you actually place any trades here. So, like I mentioned here, I'm going to kind of give you an overview of what we'll be going over here. I know a lot of you are probably brand new to the Forex market. Don't worry. I'm going to quickly get you up to speed here, take a quick minute or two before we jump into the charts, get you up to speed on what the Forex market is. I'm also going to teach you what is called the London Daybreak trading strategy. That strategy that I was just alluding to here just a second ago, that with the 6 currency pairs I'm going to show you, you would have won all 6 trades here today. I'm also going to show you how to analyze using our charting software and some of our automated tools that are built right into our charting software. I'll show you that current trade opportunity and why I'm actually looking at it. I'll show you how to set up a demo trading account. Plus, I'll show you how you get everything I'm showing you here today on a trial. In fact, everything you see here today, you'll get to take for a test drive for about the cost of a pack of gum. So stick with me here. I'll show you how you can do that here today. As Renee mentioned, my name is William Gallagher. I'm coming to you live from the Market Traders Institute today. I've been in these markets since about 1998, mostly in stocks and options. It was about a little less than 4 years ago where I got into the Forex market. Reason for this is because I was in a webinar. Like those of you who are here today, I was in a webinar just like this. I became interested in the Forex market. In fact, the same education I'm showing you here today, everything I've learned from Market Traders Institute. So I was in a webinar just like you were here today. I've gone through this education. And then what ended up happening is Market Traders Institute, they asked me to start going out and doing these presentations to help get new traders up to speed very quickly in this market. So I am a full-time active trader. I am actually a student of MTI. Now, those of you that may have missed my colleague earlier, a little bit about Market Traders Institute. This building you see on your screen right here, this is actually our building. We are located in Orlando, Florida, about 15 to 20 minutes north of Walt Disney World. Now, the reason I want to talk about this is because when you go through our full education, you can literally come here to our building and you can get trained live in person right in one of our classrooms. We have students that come to our building on a daily basis and they get trained live in our classrooms here. Now, I'm broadcasting out the second floor here. We are in a 70,000 square foot training and trading facility. In fact, actually over the last 30 years, we actually have had over 30,000 students. I actually think it's closer to 50,000 students now that have gone through our training here. And we are getting a little bit of notoriety here, a little bit of accolades. Some of you might recognize this little logo down here in the bottom, Inc. Magazine. We're happy to report that in 2015, MTI was ranked 1,180 on Inc. 5000's fastest growing companies. Last year we were 592. So this year we're looking to break into the top 500 here. So now you know a little bit about me. You know a little bit about Market Traders Institute. What I want to do is before we actually jump into the charts, so can I get an idea and gauge what kind of room I have with me here today? If everybody could just quickly look at the screen here and let me know what your Forex market experience is. If you are brand new to this market, please type the number 1 into the chat box. That's to let me know you are brand new. You probably know nothing about the Forex market. If you do know a little bit about this market, maybe you have a little bit of experience in this market, go ahead, type the number 2 into the chat box. That's gonna let me know maybe you've been to a workshop or two like this. Maybe you actually have even traded in a demo account. Now, number 3, type in number 3 if you are an experienced Forex trader. You're actually trading in a live account or you have a lot of experience in the Forex market. And yeah, usually in these webinars, I usually get the same thing here. Yeah, Ricardo's a 1, I got Ethan's a 1 here. Spiros is a 1, Mirisus, however I'm pronouncing that, is a 1, Mitchell's a 2, Amit says a 3, but a stock trader here. Montgomery says he's a 1, and Joshua is a 1. Yeah, so we got a lot of people here. Oh, wow, a bunch of others here. John, Paulette, great. So yeah, it looks like a bunch of you are number 1s. Don't worry. I promise you, before I pull up my charts, I'm just going to take a quick minute or two, and I will go ahead and explain what the Forex market is. And those of you that might have a little bit of experience, Mitchell, and Montgomery, those of you that are 2s, just bear with me here just a minute. I promise you, I'm going to pull up my charts here in just about a minute or so. So let's go ahead. Let's get started. For those of you who are brand new, what I want to do is I want to explain to you what the Forex market is. I'm going to explain to you what you're doing when you're trading Forex currencies. I'm going to explain to you what a PIP is and why you want them. But more importantly, I'm going to teach you some trading strategies. So I had to do some analysis where you can literally get started trading in this market today. I'm going to show you actually where to get started. So let's go ahead, let's get started. Let me explain to you what the Forex market is. The Forex market is the largest financial market. There's over $5 trillion that is daily traded in this market. So what that means is that there's a ton of potential in this market for people just like you and me, if we were just trying to get a fraction of that. So it's a very large market. It's the largest market. It's also a very liquid market. It's very easy to get in and out of this market very quickly. There's always buyers, always sellers, so it's very easy to get in and out of this market here. Lots of opportunity in this market that way as well. Now, one of the things I also explain is that it is also a flexible market. Now, what I mean by that is that there are 3 major trading sessions that go on in the Forex market. You have the Asian session, you have the London session, you have the New York US session. These sessions overlap. This is important with the trading strategy I'm about to show you because these trading sessions overlap, and what that means is that you can literally trade the Forex market 24 hours a day, 5 days a week, from 5:00 p.m. on Sunday evening Eastern time through 5:00 p.m. on Friday Eastern time. So it's a very flexible market. It's a large market. It's also a very liquid market. The other neat thing about this market, one more quick thing about it, is that it allows you to focus. Those of you who's a stock, yeah, Ahmet says he's a stock trader. Yeah, those of you like myself who've traded stocks in the past, you already know that there's probably several thousand different stocks you can watch and trade. The neat thing about the Forex market is that there's only about 60 different currency pairs to trade. Now, because MTI, we have 23 years of a trading experience, we'll show you which ones to focus on, and we'll also teach you the secrets to trading them. So I'm going to have you focusing on 6 specific currency pairs here today. When I pull up my charts, you'll probably see that I generally focus on 20 of those 60, but today I'm just going to show you 6 to pay attention to, and also show you a trading strategy of how to trade around them here. So what I want to do is let's go ahead, let's jump in right now, and let me quickly explain to you that when I pull up my charts, this is what you're going to see. You're going to see a chart that looks like this. This is what we call a candlestick chart. Now let me explain to you what we are doing in this market. What we're doing is we're trading one country's currency against another in an attempt to figure out which one's going to gain in value against the other. So when you look in the upper left-hand corner of the chart, you're going to see the name of the currency pair. In this case, this one says GBPUSD. This is the Great British Pound versus the US dollar. So in essence, what we're doing is we're taking the pound versus the US dollar, and we're trying to figure out which one's going to gain in value against the other. Now, as the market's going up, the pound is gaining in value over the dollar. When the market's going down, the pound is losing in value to the dollar. Now, as I just mentioned here, this is what's called a candlestick chart. We teach our students how to trade using Japanese candlesticks. That's what these little rectangles are. Now, I'm not going to go into a lot of detail explaining what these candlesticks are, but what they are is they are a visual representation of how much the market has moved and what the market has done in whatever time frame you select on your charts. So if you go back up to the upper left-hand corner of my screen up here, you're going to see that this is a 1-hour chart. So that means that each one of these rectangles, each one of these candlesticks is going to represent what the market has done in 1 hour of time frame. The charts I'll be using today are going to be on a 1-hour chart. Now, once again, I'm not going to explain a lot about this, but all you really need to know, for those that are brand new, if you're taking notes, write this down. The white candlesticks mean that the market went up and closed up during that 1 hour of time frame. They're called bullish candlesticks. We also have dark blue candlesticks. These are called bearish candlesticks. These mean that the market went down and closed down during that hour. So all you really need to know is that white means the market is going up and blue means the market is going down. Now, one other quick thing, which I'm going to talk about as well, these candlesticks form what we call candlestick formations. We look at these candlestick formations kind of like the sign language of the market. They're helping to tell a story here. In fact, here, at the bottom left-hand corner of my screen, this one is called a Morningstar candlestick formation. So what this is saying, hey, Montgomery, hey, Ricardo, Ethan, Jay, look for this market to U-turn and go upward in a bullish movement. At the top of my screen, this is called an evening star candlestick formation. This is saying, hey, Ike, Paulette, John, look for this market to U-turn and go downward in a bearish movement. Now, I'm not going to go into a lot of details to teach into this here today, but I'm going to show you how our charting software actually will point these out. So I'll pull that up here in just a second. Just want to explain to you here. So you might write that down. Candlestick formations, we look at them as being the sign language of the market. Now, two other quick things before I pull up my charts. You need to know what a PIP is. Now, PIP, P-I-P, it is an acronym. It stands for price interest point. Now, let me just quickly break this down in the simplest of terms. I'm sure most, if not all of you here in the room today, you probably already know that there are 100 pennies in a US dollar. So what that means is that a penny, it represents 1/100th of a US dollar. Now, if we were looking for a unit of measure that is smaller than a penny, it would be the equivalent to what is called a pip. Just as there are 100 pennies in a US dollar, there are 100 pips in a penny. So a pip, it represents 1/100th of a penny. Now, if you look at this number right here, the first two numbers past the decimal, these are your pennies. These next two numbers, these are your pips. So pip, price, interest point, very important. We're going to be capturing pips in this market. Now, to determine what these pips are worth, you're going to be utilizing leverage in this market. This leverage is going to be providing you buying power. This is going to be provided by your broker, and this leverage is going to allow you to place the trades and to generate a leveraged return on those pips. Now, in the Forex market, we trade in lots. We have three major lot sizes. We have what's called a micro lot. A micro lot is about a $20 investment per trade. Each pip that you capture is going to be worth about 10 cents. So if you're trading at a micro lot level, your 50 pips that we're going to be going after them. I'm going to teach you a trading strategy going after a minimum of 50 pips. Those 50 pips are going to be worth $5 in profit. Now, if you're trading with a mini lot account, a mini lot is about a $200 investment from your trading account. Your broker borrows this investment size, allows you to place the trade in to generate the pips. In this case here, each pip that you capture is going to be worth $1. So with a mini lot level, the same 50 pips now are going to be worth $50 at $1 per pip. Now, a standard lot. A standard lot is the standard by which most traders strive to achieve in this market. A standard lot is about a $2,000 investment per trade. Each pip now is worth $10. So those same 50 pips, same thing you've done at a micro lot and a mini lot level, you're just trading at a standard lot level, they are now going to be worth $500 in profit. Now, I already know some of you right now are probably thinking, well, William, I can't invest $2,000 per trade right now. Some of you might be saying, you know, I can't even invest $200 per trade. Don't worry. We'll teach you and show you how you can start off at a micro lot level, or you can open up a demo trading account, practice in this account, practice in this market, trade in a practice and demo account. As your confidence level builds, as you get to that point where you actually are ready to invest at a micro lot level or a mini lot level. But the thing is, whether you start off at a micro or a mini lot level, allow your confidence to build, allow your account level to build, and then you can go from a micro lot to a mini lot. And then as your confidence builds, your account level builds, you'll go from a mini lot to a standard lot. So we'll teach you how to crawl. We'll show you how to walk, and then we'll teach you how to run in this market. You don't have to invest a lot of money to get started. I'll show you today how you can actually just get started trading in this market using a demo account before you invest any money into this market. So now you have all the basics down. Let's go ahead, let's get started on learning how to get started very quickly in this market. Now, I need to introduce you to this gentleman here. His name is Joshua Martinez. He is one of our product experts here. He's trained thousands of Forex investors. The trading strategy I'm about to show you here today, he actually invested $500 into his trading account, and he ended up generating over $39,000 in profit using the same trading strategy I'm about to show you here. Now, the reason I talk about Josh Martinez is he is the creator of the London Daybreak trading strategy. Now, to see his My FX Book account here, this is from last year. It says here, this is actually through February through October. He was up about almost 37,000 pips. He actually ended, I actually need to update this. I really need to update this before my next presentation. But last year, he actually captured over 38,000 pips in his trading accounts. This year, through May, February through May, he was up another 6,700. So hopefully I'll update this before my next presentation. But these are the type of results that Josh is getting in this market. So the reason I want to talk about that is I'm going to kind of give you my Cliff Notes version of how this trading strategy works. Those of you that get involved today and you take advantage of this trial here, the charting software trial, you will get a video from Josh where he goes into much greater detail explaining how the London Daybreak trading strategy works. So you'll actually get a video from the creator of the strategy going into much greater detail and explaining how this works here. I just want to explain to everything here. Take notes as you're going, but he'll go into much greater detail about it as well. So let's go ahead, let's get started. I'm about to pull up my charts and I'm going to explain to you what is called the London Daybreak trading strategy. The London Daybreak trading strategy is going to utilize these 6 currency pairs: the Great British Pound Canadian dollar, the Great British Pound US dollar, the Great British Pound Japanese yen, the Great British Pound Swiss franc, the Great British Pound New Zealand dollar, the Kiwi, and the Great British Pound Australian dollar, the Aussie. As I just mentioned here a minute ago, we're going to be looking to go after a minimum of 50 pips per currency pair per day. So what that's going to do is that's going to give you 5 opportunities on each one of these currency pairs each and every week to utilize this trading strategy. So like I said, I'm going to kind of give you my own Cliff Notes version of this. You get a video from Josh. He'll go into much greater detail. So what I'm going to do is I'm going to go ahead. I'm going to pull my charts right now. And everybody right now, you should see the same 6 currency pairs, the same 6 charts as what I was explaining here. So you have the upper left-hand corner, you have the pound Australian dollar. Upper middle, the pound Canadian dollar. Upper right, the pound Swiss franc. Bottom left, Great British Pound Japanese yen. Middle is the pound New Zealand, the Kiwi, and the bottom left is the pound US dollar. Now, I'm going to come in here, I'll show you on these, the trades from this morning. All 6 of these here were winning trades. I'll come back in here, I'll show you how that all works, but what I'm going to do is I'm going to teach you the strategy first so you get an idea of how this actually works here. So let's go ahead. What I'm going to do is I'm going to come in here, I'm going to demonstrate this for you on the Great British Pound Canadian dollar. Now, somebody actually just asked, so these are all on a 1-hour time frame. Yes, each one of these charts is on a 1-hour time frame. In fact, actually, I actually want to explain something here. You will be getting this workspace as part of the trial here today. I believe Josh gives you this workspace as part of the trial as one of the free bonuses. The charting software is part of the trial as well. You'll get the charting software. You'll be able to take it for a test drive. You'll get this workspace and you'll get a couple other free bonuses with this as well. Now, this charting software, this is our ultimate charting software. We've invested millions of dollars into it. There's a lot of unique great features built in. I'll come back in here after I teach you this trading strategy. I'll show you how to manually analyze the markets, and I'll also show you how to use some of the automated tools that are built into the charting software. But basically what you're looking at here, for those that are brand new, as I mentioned, this is the pound Canadian on a 1-hour time frame. And on this chart, this is a candlestick chart. The right-hand side of the screen, this is your price action. The bottom is the time period here. So what I've done here, I'll come back down here to my charts. I've already highlighted the recent trades over the last week or so. But let's bring this down just like this here. And let's go ahead, let's get started. Let me explain to you how this trading strategy works. Let's quickly draw this just like this. And there we go. So this is the beginning of the London Daybreak trading strategy. What we're going to be doing here to get started is that we're going to be looking for in this market the initial high or low for the day. We're going to be looking for this to occur between 2 o'clock a.m. Eastern time and 5 o'clock a.m. Eastern time. We're going to be looking for the market to either pull back and form its low for the day and then to rally up. We're going to look for the market to rally up, form its high for the day, and then to pull back. Now, the reason for this, as I mentioned just a couple minutes ago, there are 3 major trading sessions that happen in this market. What you have going on here is you have the close of the Asian session, you have the opening of the London session here. So we're looking for this directional movement here, and it's gonna be based off of the initial high or low for the day. So you might wanna write that down. Now we're also gonna be looking for the opposite high or low for the day. We're gonna be looking for this in between 8 o'clock a.m. Eastern time and 2 o'clock p.m. Eastern time. The reason for this is because you have the close of the London session and you have the opening of the New York session here. So what we're ultimately looking for is the initial high or low and this directional movement that's going to happen during this time period. Now, what we have found is that on each one of these 6 currency pairs, they have what is called an average daily trading range. What that means is we're going to be looking for each one of these currency pairs to move at least 50 pips on the low side and over 200 pips on the high side. So this directional movement, we're looking for a minimum of 50 pips in one direction or the other. So what we're gonna be doing today is I'm gonna be showing you a trading strategy where we're going after what I call first base. I'll show you how to go after a minimum 50 pips per currency pair per day. Now, I think in Josh's video, he'll show you how to go after more than 50 pips. I'm gonna show you how to go after a minimum of 50 pips per pair per day. Now, if you remember, if you were trading with a micro lot account, each pip is going to be worth 10 cents. You're going to be generating about $5 in profit per currency pair per day. With a mini lot account, with each pip being worth $1, you're going to be looking at $50 in profit per currency pair per day. And with a standard lot account, with each pip being worth $10, we're going to be looking at $500 per profit per currency pair per day. So you can determine which type of trader you're going to be. If you want to invest $20 per trade, you'd be a micro lots trader. $200 per trade, about $200 is a mini lot trader. $2,000 per trade, you're going to be a standard lot trader. You'll determine that. And once again, you can start off as a small account and you can build your way up here. So now that everybody has this done, like I said, you'll be getting a video from Josh where he goes into much greater detail about this. Let's go ahead, let's go into the charts here. I'll show you how this actually works here. So I'm going to get started here showing you a very simple trading strategy here, and then we'll come back in. I'll show you how to actually manually analyze the market using some manual analysis here. So I'm going to come back in here just like this. And what I've done is I've come in here, I've highlighted some of these here. So right here you have, actually I have this built into the charting software here so they highlight each one of these here. But if you can see right there, there's 3 o'clock a.m. on June 21st. Directional movement going up. In fact, the directional movement coming off of this one right here ended up being, we'll just start right there. That's 126 pips. This candlestick right here, this is 3 o'clock a.m. on June 22nd. Directional movement going down, 139 pips, and then so on here. This one is from June 23rd and so on. This one going down, another 56 pips and so on here. So you can see here the directional movement coming off of each one of these right around the 3 o'clock candle. In fact, I'm gonna go ahead, I'm gonna bring this up to the beginning of the week. Right here, here's our 3 o'clock a.m. candle on Monday morning at 3 o'clock a.m. And this ended up moving, actually I already have it written down there, it moved 84 pips. So if we go back to the beginning of this week here on the pound Canadian, on Monday's trade, you would have been up about 80, it moved 84 pips. You probably would have captured what, about 50 to 80 of those pips, we'll say 50 to 75 of those pips with the strategy I'm about to show you here. So somebody just asked the question, why does this happen? Well, let me go ahead and explain that here before we jump in. It's been said that during the European market, the banks are processing the largest bulk of the Forex transactions. So what ends up happening is during this period, the banks are processing their orders. This provides a huge injection of volume and this directional movement into the market. So this trading strategy give you and I the ability to take advantage of this directional movement here. So let's go ahead, let's get started. And once again, somebody just asked what this is. What I'm about to show you, this is the London Daybreak strategy. And we're going to be basing this off of the close of the 3 o'clock a.m. Eastern time candle. So each one of these candles is 1 hour in time frames. So essentially what that means is at 4 o'clock a.m. is when the trading strategy actually starts taking place. So I'm gonna go ahead. This was on Monday. As I just pointed out, that was Monday at 3 o'clock a.m. Nice little movement going bearish on that trade. So I'm gonna go ahead and I'm gonna bring this right, and we'll get started here. Let me show you this trading strategy right there. So this is on Tuesday, July 4th at 3:00 a.m. So I'm gonna move this over here, and let's zoom in here nice and tight, because we're basing this off of the close of the 3:00 a.m. candle. I'll bring this down here like that. There we go. In fact, I'll bring this down a little bit more. So I'll make this nice and big so everybody can see this here. Okay, there we go. Okay, there we go. I'm going to also bring this up here in just a little bit. Let me explain to everybody that before we get into a trade, there's going to be 3 questions we're going to need to answer, or at least develop an educated opinion. Number 1, which direction is the market going? Do we believe that it's going to go up, or do we believe it's going to go down? Number 2, we have to determine where and why to get into the market. And then number 3, where and why to get out. And the trading strategy I'm about to show you here is going to answer each one of these very quickly. And I'll come back in here, I'll show you how to manually analyze the market, answering each one of these 3 questions. So let's go ahead, let's answer question number 1. Which direction is the market going? So let's get started. Here's our 3:00 a.m. candle. When we get started here is the beginning. If you're taking notes, this will probably be a good place to start. At the close of the 3 a.m. candle, we're going to place 2 pending orders. One pending order is going to go 10 pips above the high of this 3 a.m. candle. So 68.27, we're gonna set this at 68. Right about there, 68.37. I'll type this out. This is going to be our entry buy position. Our entry buy is going to be 10 pips above the high. And the high also includes that little candlestick wick coming up right there. So measuring it off of that. So entry buy is going to be 10 pips above the high. Now we also have our entry sell position, which is going to go 5 pips below the low. So the low here is 67.95. We'll set that at 67.90 right there. I'll type that out as well. Entry sell is going to equal 5 pips below the low, meaning that 5 pips below the low of that candlestick wick, there's our entry sell. These are both pending orders. We're not in the market until we actually get triggered either into the buy or into the sell. It's gonna help us answer question number 1, which direction is the market going, and like also where and why to get into the trade here. So let's go ahead, we have our 2 pending orders set. Let's see what ends up happening on this trade. So 1 hour later, bam, our entry sell gets triggered. So what that means is that our entry sell, that just became a market sell, meaning that we now have an educated opinion where we believe that that directional movement is now going to be going down. It's going to be going bearish here. So we're selling the market here. The first order of business is when we get triggered into one of the positions to come in here and cancel one of these opposite orders there. So we cancel that opposite order. So we've determined which direction is the market going, where and why to get in. Now, the next order of business is to come in here and we need to protect ourselves. So what we need is we need to come in here and we need to set up a stop loss. When you set our stop loss, it's a little bit different here when buying the market versus selling. Our stop loss is going to go 5 pips above the high of this 3 a.m. candle. So right about 68.33. $68.33 right there. That's our stop loss. I'll type this out for everybody as well. As our stop loss. It's our stop loss when selling the market. A little bit different when buying. I'll explain that here in just a second. Some of you have been asking why 10 pips above, why 5 pips below. I think Josh goes into explaining how that works, but actually I'll try to explain a little bit as we're going along here. So stop loss when selling is going to be plus 5 pips above the high. There we go. So we have our entry, we have our stop loss set. Let's go ahead, let's pull this down here just a little bit here. We need to determine where we're going to get out of this trade. Now, we're going to get out of this trade. Our exit, which is our target, which is also referred to as our limit, is going to be one of two different things. It's either going to be a 1-to-1 risk ratio, or 2, a minimum of 50 pips. So in this case here, we're just simply going to come in here. I'm going to show you how to go after that minimum of 50 pips. So we'll come in here. Actually, let's see how much we're risking on this trade. We are risking, okay, so we're risking 43 pips on this trade, so we would be going after that minimum of 50 pips anyway. Yeah, somebody's just asking about the stop loss. Yeah, the stop loss here is to protect us if the market goes against us. So we're only risking 43 pips on this trade, but we're going to be going after 50. So our exit is going to be way down here, right there at 67.39. Up right there, bam. So we have our entry, stop loss protection set up, and our target, our exit, is right there. So we're ready to go. So at this point, everything is set up in your broker's platform. Some of you are wondering, well, do I have to get up at 3:00 a.m. to do this here? Well, at this point, you can go back to bed, because one of two things is either going to happen. Either the market's going to go against you and you'll get taken out automatically, losing 43 pips, or you're going to exit out of this trade here up 50 pips here. So let's see what ends up happening here. So 1 hour later, 2 hours later, 3, 4, 5 hours later, the market does in fact gives us that directional movement going bearish, and we are now out of that trade. So we just captured on Tuesday's trade, we just captured another 50 pips on that trade. So if you remember back on Monday's trade, we captured 84, or there's 84 pips of directional movement. We probably captured between 50 and 75. On this one here, we captured 50 pips. Now, to give you an idea of how much that would have been worth, if you're trading with a mini lot account at $1 per pip, you just generated about $50 in profits. With a standard lot account, you just generated about $500 in profits. And that was in about, what, 1, 2, 3, 4, in about 5 hours. Not too bad. Like I said, pretty much at this point, you would have went to bed, and that would have happened while you were sleeping here. Not too bad here. So not too bad. So the first two trades of the week, pound Canadian, not too bad. We're up, we'll say 50 pips on that first one, 50 pips, you're up 100 pips so far on that one. So let's go ahead, let's keep moving forward. I have about an hour's worth of material here that I'm trying to show everybody here, within 45 minutes. But I just want to kind of give you an idea and show you how this is all working here. So let's delete all this here, because I definitely want to show you how to manually analyze the market. Now, one of the things I want to point out as well, you can see here the market even moved down a little bit more, and then begins the U-turn. So there's a total there. The total directional movement off of that was about 112 pips. So I think Josh will show you in that video how to go after more than those 50 pips. We're going after more on that one as well. So let's go ahead, let's show you one more trade here, and we'll get into that manual analysis. So here we are, this is Wednesday morning, 3:00 a.m., same thing as what we did before. At the close of this 3 a.m. candle, we're gonna come in here and we're going to set 2 pending orders. One pending order, our entry buy is going to go 10 pips above the high, so 67.31. This is gonna be 67.41. I'll type this out. Entry buy is going to be plus 10 pips above the high. There we go. And we're also going to set an entry sell. This is going to go 5 pips below the low. So 66.88. Set this at 66.83. That's going to be our entry sell. That's going to be minus 5 pips below the low. There we go. So 2 pending orders. Let's go ahead and let's see what ends up happening here on this trade. So 1 hour later, 2 hours later, we get triggered in. Our entry buy just became a market buy position here. We're now triggered into the market. What that means is that we've given that educated opinion where we believe that directional movement is now going to go bullish. So what we're going to do is the first order of business to come in here and cancel this opposite order, just like that. We're gonna cancel that because we're not looking to sell the market, we're looking to buy the market. Next order of business to come in here, just like we did last time, and to set our stop loss. A little bit differently here. Our stop loss when buying into this market is going to go at the low of that 3 a.m. candle right there. So in this case here, we would be risking, we're risking 52 pips. So let's go ahead, we'll just, as I told you before, our target now, which is our exit, which is our limit, is either one of two things. It's either a 1-to-1 risk ratio, or it's going to be a minimum of 50 pips. So we'll come in here. In this case here, we were risking 52. Oh, sorry, 53. So let's go after. Oh, I'm sorry. We're risking 52. We're risking 53. Let's go after 53. There we go. So 1.6794. So 6794 is going to be our target. Let's see what ends up happening on this trade. We have our entry, profit. We have our protection set up. Our limit. Let's see what ends up happening. So 1 hour, 2, 3, 4, 5 hours later, just like on that previous one, the market rallies up, hits our limit, and we just captured another 50 pips on that one. So once again, mini lot, you just made another $50 in profit. With a standard lot, you just generate another $500 in profit just like that. So I'm not gonna spend a lot of time on this. You'll get a video from Josh. He'll go into much greater detail about this, but what I'm gonna do is I'm gonna bring this to this morning. I'll show you what this did over the past week here. So let's see here. That was from Tuesday. That was from Wednesday. Let me see if I can find that Monday trade. There we go. So we captured 84 pips on Monday, 50 pips on Tuesday. We actually captured 52 pips on that one. We'll just call that 50 pips. So this was probably 50 pips as well. We'll make it very easy. Even though it moved to 84, let's say we just captured 50. So 50, 50, 50, we're up 150. This brings us to Thursday morning, yesterday morning. This trade here, we would have lost 49. So 150, 150, 150, minus 49. So we're up about 101. This brings us to this morning's trade. Let's bring this here right about there. Here's our 3 o'clock a.m. from this morning. Watch what happened here, my friends. Bam. The market shot down 247 pips. So yeah, we lost 49 on this one, but we captured 50. In fact, let's add this up here. We'll take a second here. So that was 50 plus 50 plus 50 minus 49. And we'll say we just captured 50 on that one, even though it moved 247 plus 50. Not too bad. 151 pips off the pound Canadian this week alone, just like that. So that was just on the pound Canadian, but let me show you here, as I told you before, the pound Canadian moved 247 pips this morning. The pound Aussie, it moved 135 pips this morning. Pound Swiss franc, 51 pips this morning. Pound US, 82 pips. The pound New Zealand moved 118, and then the pound yen, it moved 71 pips here. So this is the London Daybreak trading strategy. I just want to kind of put a quick trading strategy in your back pocket so that those of you that take advantage of this here today, this trial, you'll get a video from Josh. He's going to get a video from Josh giving you 30 trade opportunities each and every week here. He's going to go into the video and he'll explain to you how you can go after more than 50 pips. More importantly, he'll also explain to you on some days you might not want to take the trades. He'll show you where there might be days where you might not want to take the trade. So I kind of gave you a Cliff Notes version of this. You're actually going to get a video from him where he's going to go into much greater detail about that. Now, I'm going to come back into my charts here and show you how to manually analyze the market using our charting software. But I'm going to explain to you here today that everything I'm showing you here today, that trading strategy, those videos, the instruction videos, the charting software, it's all included as part of our Ultimate Charting Software trial. Now, the Ultimate Charting Software that I'm pulling up here, I'm going to show you here, we have an exclusive auto Fibonacci tool that automatically draws your Fibonacci's for you. We have an auto trendline tool, King's Crown tool, candlestick tool. The charting software can be set up to email you and text you with trade alerts. You can trade directly from the charts. We have cloud-based workspace. I'll go into that, and we can actually do demo trading and auto trading right from the charts as well. So I don't have a lot more time, so let's go ahead, let's pull this back up here. And this is the trade I showed you here before. Now this trade I'm looking at, you might want to write this one down so that when you get the charting software, you can actually look at this as a potential trade opportunity. It's the pound Australian dollar, and this one here is on a 2-hour time frame. That means each one of these candlesticks is on a 2-hour time frame. So if you remember, let's just quickly go into this. I'll just actually draw this down here. If you remember, there's 3 questions we need to answer. Number 1, which direction is the market going? Number 2, where and why to get into a trade? And then number 3, where and why to get out? I'm going to show you how to answer these with manual analysis. I showed you the London Daybreak trading strategy. That's going to answer them very quickly here with a very simple trading strategy where you don't have to know how to analyze the markets. What I'm going to do now is I'm going to show you how to actually analyze the market, how I do it here. Now, you see here, I'm looking at a current buy opportunity. In fact, actually, it looks like it's setting up right now. But what I want to do is I'm going to go ahead, I'm going to delete all this. I'm going to copy that. Let's delete everything on my charts. There we go. There we go. Okay, there we go. So let's answer question number 1. Which direction is the market going? To answer this question, I'm going to utilize what's called a trend line. And what I'm going to do is I'm going to draw my trend line just like that. Now, the neat thing about this trend line, it helps to take some of the fear out of the market, because when we are below this trend line, we are in the sell zone, meaning that we're looking to sell this market. When the market breaks above, we are in the buy zone, meaning that we are looking to buy the market here. So I actually just manually drew my trend line just like this. The neat thing about our charting software, as I just mentioned, we actually have some smart tools built in. We have a smart trend line tool. So let's just say that maybe I didn't accurately draw that trend line. I can come up here to the beginning of this new trend, and then bam, as you can see here, I actually didn't draw it properly here. So this is my proper way of drawing the trend line. It draw it quickly, accurately, and automatically for me, just like that. So we just come to the beginning of that new trend. It drew my trend line. As you can see here, the market right here broke above that trend line into my buy zone, just like that. So where we are currently right now, we are in the buy zone. So what that means, I'm looking to take buying opportunities. So that just answered question number 1. Which direction is the market going? I'm in the buy zone. I'm looking for buying opportunities. Now let's go ahead and let's answer questions number 2 and 3. Let's delete all this. To answer this question, I'm going to utilize what's called the Fibonacci tool. Now, I'm not going to go into a lot of time explaining how the Fibonacci tool works. You'll get a video from Josh explaining how to use this Fibonacci tool, but let me just quickly explain to you what we have found in this market. We have found this market tends to move in waves, just like this here. When the market's going up, it's moving in what's called an A, B, C, D pattern. And then when the market's going down, we're looking for the market to move in an A, B, C, D pattern. Now we have a tool that's going to help us take advantage of these waves. It's called the Fibonacci tool. Now, when we determine this A to B boundary, and we can teach and show you how to determine this A to B boundary, we can come in here and spread our Fibonacci tool from the A to the B, just like that here. Now, these numbers, don't pay attention to the numbers. All you need to know are colors, because what we've done is we've color coordinated our Fibonacci tool. Now, what I mean by that is that in between this A and B boundary, we're looking for a high probability of a pullback or a retracement here. So these lines here in between the A and B boundaries, these are called retracement lines. We're looking for the market to retrace, form a U-turn or the C point, and then extend. These lines above the B level, these are called extensions. Now what we've done here is we've customized our Fibonacci tool so that the red retracement lines, like a buddy system, coordinate to the red extension. The blue retracement line coordinates to the blue extension, and then the green retracement line coordinates to the green extension, like a buddy system, red to red, blue to blue, and green to green. What that means is that when this market pulls back and forms the C point, I'm going to show you here how we can help predict this C point in just a second. But if we were to buy into the market after that U-turn, What this is telling us is that to look for our D point at the red extension. We'll look to exit that trade at the D. So where the market has been is going to help us predict where the market is going. If the market pulls back here to my blue retracement line, it forms that C point right there and U-turns, and we buy into the market after that U-turn, what that's telling us is we're going to be looking to exit our position at the blue extension, like a buddy system, blue to blue. Most of you can probably already guess if the market pulls back and U-turns at the green retracement level and forms that C point, and then we buy into the market after that U-turn, we're going to hold our position, exit at the green extension. There's our D point right there. So green to green. So red to red, blue to blue, green to green. The same thing happens when the market is going down. We can do the same thing when the market's going down. A, B, C, D. Red to red, blue to blue, and green to green. Now, like I said, I'm not going to go into a lot of details about the Fibonacci tool. You'll get a video from Josh. He'll go into much greater detail about that. Now, the reason I don't want to go into much detail about it is because we have a tool called our Smart Fibonacci tool. It's going to do all of this for us automatically. So let me go ahead. I'm going to zoom in here. And just like what we did on the trend line, we're going to come here to the bottom of this new trend, take my Smart Fibonacci tool, come here to the very bottom of that new trend, and I'm going to click my Smart Fibonacci tool just like this. It's going to quickly, accurately, and automatically draw my Fibonacci swings for me. So if you can see here, we had one A, B, C, D swing. We had another A, B, C, D swing, a third A, B, C, D swing, and it brings me to the current A to B boundary. So you don't have to find the automatic or A to B boundaries. The Fibonacci tool is going to do it automatically for you here. So I'm going to zoom in right now and let me quickly explain to you why I'm looking at this current trade opportunity. Here's our A to B. The market rallied up a little bit, has pulled back right here. The market pulled back right here, right at that red retracement level. Now, I'm looking at this as a buying opportunity right now for a couple different reasons. If I come in here, if I were to draw what's called a counter trend line, just like that, you can see that right here, right there, the market is breaking my counter trend line. That's giving me one indicator that this is going to be my C point right here. Another indicator is if you can see here, this green candlestick here. You might be wondering, well, William, you said that there were white and blue candlesticks. Well, here's another neat feature about our charting software. Those candlestick formations that I told you to look out for, you can turn them all on our charts here. So if you look in this previous here, this previous A to B boundary, you would have had several different buying opportunities. There was one buying opportunity off that green candle. Here's another buying opportunity, another buying opportunity. Every time this market U-turns, it's giving me that green candlestick. So what I'm looking at right here, as you can see, right in the last, since this webinar started, I'm now getting that green candlestick, giving me an indication this is probably an engulfing bullish candlestick or some sort of candlestick formation saying, hey, William, look for this market now to U-turn and to go bullish. So if at this point, let me delete these here. At this point, we've pulled back to the red retracement level. If I were to buy, when this market closes above this counter trend line, where am I going to look to exit my trade? I'm going to look to exit my trade right here at the red extension, like a buddy system, red to red. So in this case here, I'm going to be going after, let's just say where the current live market is to where that is, that's 310 pips of opportunity on this trade. If when it U-turns and I buy in the market, it's about 300, what I say, about 300 and about 310 pips here. So, and some of you might be wondering, well, where would I set my stop loss? Well, I normally wouldn't explain this, but I'll explain to everybody here. What I'm going to be looking to do, there's two different things just to give you a little bit of our education here. We teach a couple of different strategies. One strategy is to put our stop loss, if we want to be an aggressive trader, put our stop loss below the A. We have a saying here that goes, if the market does not pull back and take out the A, the market has no choice but to go our way. Now, what I like to do is I like to set my stop loss about 10 to 15 pips below this U-turn. So in this case here, 69.14, I'd be looking to set my stop loss right there at 69.04. So in this case, let's just say if we were to buy into the market right now, I would be risking about 50 pips. I'm going after 315. So what this is Let's just say that it is where it is right here. This is a 6-to-1 risk ratio on this trade. How many of you think that that'd be good risk management? I'm going after 6 times as much as what I'm risking on this trade. Yeah, so here's the other neat thing about our charting software, and you're gonna learn how to do this. Let's just say that I wanted to go ahead and buy right now. All I would have to do is simply right click on my chart and hit buy. Market buy right there. I already have trading account set up here that all I'd have to do is come in here, set my limits, my stops, hit OK, and bam, I'm in the market buying. The charts are connected to my broker, just like that. We can teach you and show you how to do that as well. Now, if I didn't want to wait for the market to break above this trend line here, all I'd have to do is come in here. I can set an alert. I told you how to set it. We can teach you how to add alerts. We can teach you, show you how to add an email or a text alert. This can come right to your phone. Let's just say you're not in front of your charts, and maybe the market breaks above this trend line. We can show you where it can send you a text message or an email alert alerting you saying, hey, market's breaking above. You might want to go look at your charts just like that. We'll teach and show you how to do that as well. So this is the pound Australian dollar in the 2-hour time frame. It's setting up right now as a huge opportunity of what I'm looking at right now. So I told you I'd give you that opportunity here. So the other thing about this is that everybody, when you get the charting software in your hands here tonight, practice this. You can set this up just like I have here, and you'll be able to go after that same here. So the charting software is the trial here today. I told you I'd show you how to get this in your hands here today. You're going to get the trial software. In fact, actually what I'm gonna do is let me explain to you what you're going to get. You're gonna get the charting software, all the instruction videos, everything for 7 days to take it for a test drive for $1. I believe it might even be risk-free, but I'll pull that up here in just a second. So you're going to get the charting software, the auto tools, those smart tools, everything I showed you here today, you're going to get to take for that test drive. Now, the other neat thing about this is as part of this trial, as I mentioned, you're going to get instructional videos from Joshua Martinez, the creator of the London Daybreak trading strategy. He'll show you how to set up your demo trading account, how to enter and get out of the market. He'll show you how to get those 3 free workspaces I was telling you about. He'll go into much greater detail explaining how the Fibonacci's work. You're also going to get instructions on how to navigate and use the charting software, how to use the toolbars, how to create your own custom indicators and save templates. I didn't even get a chance to talk about that. That auto Fibonacci tool, that smart Fibonacci tool, he'll go into detail teaching how to use that. We'll teach and show you how to link your broker and create a trading workspace off this as well. Now we'll show you how to back up and save all your work. We'll teach you and show you how to deploy an auto trading system. We'll show you how to set up your auto trading system and so on here. All this is included. You're also going to get live sessions each and every Friday. As long as you have the charting software, each and every Friday, you'll sit down with either myself or one of my colleagues in a live webinar setting just like this. You can ask them questions. Ask them questions about the charting software. I suggest you get the charting software in your hands here today. Write down some notes. Next Friday, if you have any questions, you can log into this special webinar and you'll be able to get your questions answered. And you'll also get that London Daybreak trading video right from Josh as well. All of this is included as part of the trial. Now, the neat thing about this charting software is that normally you would have to be a student of Market Traders Institute to get the charting software. And it would cost you, you'd have to be one of our students as part of one of our ultimate trading packages. Usually they're about several $1,000s. The one that Joe was talking about today, I think was about, what, about $3,000 or $4,000 or so. And normally it would be on a month-to-month subscription for about $249 a month. But today, I told you we were gonna make this affordable for everybody. You get the charting software to take for a test drive today for only $1. Get this in your hands for today. Take it for a test drive for the next week. See if the Forex market is for you. Practice doing that London Daybreak trading strategy. Take a look at that trade opportunity I just showed you. See if this is for you. Now, the other neat thing about this is that for those of you that choose to go beyond the 7 days of the trial, and you want to keep the charting software and all this education, it only costs you $59 a month. It's on a month-to-month basis. There's no long-term contracts or anything. We'll get you locked in for this. So this is our Investor Inspiration Special here today. You'll get those 3 free bonuses from Josh as well. Now, to get started, what you're going to need to do, I'm going to send this out to everybody in the room right now. I'm going to send out a link. You're going to need to click on that link, and it's going to take you to the page to register to get the charting software here today. So I'm going to walk you right through that process right now. Step number 1, you have to enroll into the Ultimate Charting Software 7-day trial. It's that link I just sent out. Now, if you did not get that link in the chat box, go ahead and put a message in the box here, and I will go ahead. I will send it out to you personally here. That's the first step. So what you're going to do is you're going to come onto this page. Right here, the link takes you to this page. You enter all your information. There's disclaimers here. All this information is right here. You hit pay now, and you'll get access to this. Now, I think what's going to happen is you'll get one email that's going to let you know that you did in fact enroll into the charting software trial. And I think you'll get another one that's going to give you all your login information to get into that back end portal that I just showed you. So that's the first step here. So, okay, I got a couple of you. Hold on, a couple of you saying you're having trouble with the link. So hold on 1 second here. I'll send it out 1 second here. There you go. Garrett, hold on 1 second. There we go. So, okay, I'm gonna go ahead. I'm gonna send that out one more time to everybody here. And if you didn't get the link or if you're having trouble with it, I will send it to you personally in the chat box. I want to make sure that everybody gets this because this is only for this webinar. At the end of this webinar, if you have not registered for this, then you're not gonna get a chance to actually take advantage of it. So I just sent that out. In fact, let me send this out to everybody here in the room as well. And if you are actually registering for this, let me know that it did go through successfully. I just want to make sure that, oops, sorry about that. There we go. So the first step is to click on this link and register for the actual trial, or simply type this URL into your browser window, and you'll go right to that page that it showed you. Now, the next step, you can do this today, is to view the training lessons for the charting and the London Daybreak trading strategy. You can actually get these videos today, go through these videos. Each one of these videos here from Josh is included with the trial. You'll get access to this, start going through these lessons, learn about the demo accounts and the Fibonacci's and the London Daybreak trading strategy. You'll get these videos here today. Go through them today. You can set up your trading account, either a live or a free demo account. Now,